Automating the Month-End Closing of the Books by CFO On Demand from Fitzpatrick, Bongiovanni, and Kelly CPAs. Please support our sponsors. This month's sponsor is Ocean First Bank. We'll hear more from them at the end of the presentation. Welcome, my name is Lou Bongiovanni, and I will be your speaker for today's presentation. I am the partner involved in CFO On Demand for our firm. The webinar objectives. How does automating the monthly close save time and money? What areas to focus on in automating? 7 ways to best automate the monthly close. Let's get started. Why is automation important? And why talk about this month-end close? Why is this so critical that we want to do a webinar on it? Well, it's really a critical process in the overall accounting function, especially as it comes to generating reports. So we want to try to create a system that supports a process that allows the utilization of technology to reduce any or as much human interaction as possible and therefore create efficiencies. If you were doing what you were doing 2 years ago, you're well behind the best practices curve. This area has changed rather dramatically over the last couple of years, and unfortunately, I know of many businesses where this hasn't changed in quite a while. So I want to focus on automating the month-end close process. All right, so first of all, one incentive to automating is to save time. All right, the way that you save time, 3 examples of it is that, number one, you are getting it right the first time. So you're reducing the amount of time to get it accurate. You're getting it right the first time, so there's no need to go back and redo things here. CFO.com says that you save as much as 2 days a year by just doing that simple process of improving the quality through automating the month-end close, and we'll go into more details as to that. One, you avoid work bottlenecks where there's not this big rush at the end of the month and it's kind of a fire drill. You're doing a little bit each month, and that'll save you time in the long run, and we'll talk more about that as well. And errors are caught when it's fresh in your mind, more timely. So by automating it, you'll see the error soon. You'll correct it quicker as opposed to having going back 30 to 60 days to try to figure out what went wrong. So that's another benefit of automating as far as saving time. All right, days to complete the monthly close. Depending on the size of your business, and there's 2,300 businesses surveyed in this particular survey, top performers take just under 5 days to close, where bottom performers take double that. So clearly there is time savings on a monthly basis by improving the close here, and these scales might vary depending on the size of the company, but the CFO.com gave that statistic, and really it's the trend that I want you to focus on, the fact that there is significant time to be saved by your administrative department in doing this. So what can they do with more time? Well, with more time, and if it's 5 days a week, it's a substantial amount of time, they can focus on more important aspects of the accounting, which is financial analysis. So one, they might be fixated on the accounting and bookkeeping, but now they can maybe present some reports or prepare some reports to help with financial analysis. At CFO On Demand, what we do is we try to streamline the process, the month-end close, so they can support more financial analysis calculations, which we use to help business owners make important decisions or problem solve and such, so they can get more onto the higher level of analysis and not just focus on the accounting. They could also work on forecasting and, as I mentioned before, some problem solving activity. The automation process also saves money. There's an overall statistic here that we get from Wiley that says that 20 to 30% of revenue each year can be saved by eliminating inefficiencies. So there's clearly inefficiencies in the month-end close for most businesses here, and as a result of that, some additional revenues or profits in this case can be saved by streamlining that process, and we'll talk more about it in a couple of minutes. All right, so specifically, how do you save money by automating the close process? Well, number one, there's less overtime needed to actually do the function, right? You're going to just take less man or person hours to actually do the close. So in doing that, there is savings as far as salaries. Second, you avoid accounting mistakes that can be costly and time-consuming to find and fix the mistakes. And frankly, some of these mistakes may lead to poor cash flow planning decisions, which can lead to more waste of money. So this way is that you're saving more by avoiding mistakes and making poor decisions based on those mistakes. And lastly, by the employees being more productive, you could save costs. Either maybe you don't need as many employees to do the process, you could streamline it, or you can divert some of the employees' energies into doing other functions in the company, therefore saving in payroll. As far as the month-end close, the four areas that we're going to focus on is the accounts receivable process, the payable process, the bank reconciliation, and the adjustments. They're the four primary areas when you're looking at month-end closes that you want to focus on in order to save time and create more efficiencies here. We'll hit each one now. So the accounts receivable process, a more conventional way of doing it, and we still see this with many smaller companies, is that invoices are written out, maybe they're re-input into software such as QuickBooks, and then they are sent to the client or customer, mostly in the form of mailings. Even if it's recurring bills, they're mailed that way, mailed out that way. So that creates a problem there as far as there being inefficiencies in that process. All right. A more automated way of doing it is taking advantage of point-of-sale systems. So you might invoice through QuickBooks or your accounting system, which is wonderful. But if you don't, if you're doing it through a separate point-of-sale system, then make sure that that interfaces with your accounting system. And many of our accounts use QuickBooks, so you might hear me referencing QuickBooks probably more than other ones. And you just want to make sure that if you have an outside invoicing system, that it interfaces with QuickBooks so there's no duplication of entries there. You want to also have an email option as far as emailing bills to clients as opposed to doing it through regular snail mail. Many of the bookkeepers prefer it that way because they have it in front of them and in a more timely basis. Also, doing mid-month bills is something that I strongly recommend. If it's project related and you're done with the project in the middle of the month, you should generate the bill at that time as opposed to waiting until the end of the month to send out bills. Also, if there's recurring invoices, a recommendation is to not have to generate a bill, just to automatically be able to take the funds out of the account, especially if they're in small denominations. So, for example, my son might go to a gym, and the same amount is taken out. So you just have that money pulled out that we don't get an invoice, and then we might get a text notice or something like that that the credit card was charged the same amount each month. That way you streamline the process. So that's the accounts receivable process. As far as the accounts payable process, more conventional ways that we're seeing now, or outdated ways now, are that you have vendors' bills are received Many times they're received untimely because you're working off of the inefficiencies of your vendors. So if their accounting department is inefficient in sending you bills, and that bleeds over to your process as well. Many times bills will sit on the bookkeeper or the accountant's desk waiting to be approved by the owner, so that eats up time there. And then you're waiting for bills to be mailed to you. None of them are received electronically. So that's what we're seeing, a lot of inefficiencies happening with businesses that we work on. Better practices are, number one, is set a cutoff, and we strongly recommend this. So in your company, if a bill isn't received by, you can pick a date, I would just have the 4th of the following month, then that bill doesn't go into the prior month's accounting. That will spill into the next month's accounting. So now you make vendors aware of that if they want their bills to be paid more timely, you want to make sure if they're billing you monthly, that that arrives by the 4th of the following month. Also, with the bill approval process, many times owners want to see certain bills before they approve it. That could all be done electronically. The owner gets it on their phone or their iPad, can approve it, and therefore allowing the accounts payable person or the controller to pay the bill. That process all can be very easily automated, but yet many times we see it is not. You could, if there's a desire to outsource, you can utilize companies like Bill.com that do the whole process, and they outsource the entire amount. So you can go that way. If you don't want to do it internally, then outsource the function in its entirety, and it works very well for people who use that. Lastly, the last point I want to make in automation is you want to use electronic banking as much as possible. So you want to pay your bills electronically through your banking system there online, and then when they're paid, you would just need to map them out. When you open up for example, your QuickBooks and your bank statements, you would map out the payables that have been satisfied, and that will streamline the process as far as not only you booking your expenses, but actually paying them. The third step is bank reconciliations. Again, many times bookkeepers get into a rut, and that's the thing with this whole process. You're dealing many times with big bookkeepers or controllers who are accustomed to getting this on an ongoing basis, and they do the same thing month in and month out, not really trying to automate it because it works for them, but the real task is trying to get them to automate the process more. Many of them wait until the actual bank statement is received, and they struggle with knowing the balances between the bank statement and QuickBooks. All right. More automated process is using web access on a daily or weekly basis in order to look at the bank statements, comparing it to your accounting records. That saves a considerable amount of time, especially with the month-end close. Integrating the online electronic banking, which I alluded to with your accounting system, you can call up the bank's activity, it downloads into your accounting system, and then you can map what the expenses are, and frankly, after you do it once, it knows what the expenses are. And this can vary depending if you use the accounts receivable and the accounts payable functions or not. So there are different variations. So this is kind of just general advice as far as the process and how to automate it. More specifics would be entailed once you have someone looking at it, like your accountant, or as we do at CFO On Demand, we look to automate and streamline that process. And as little as 10 minutes a day can save a considerable amount of time and potentially prevent fraud in this bank reconciliation process. The last step that we want to talk about is adjusting journal entries. That is part of the month-end close, and conventionally, many entries are input to correct problems or inputting errors that occurred during the course of the month. Many times there are recurring entries such as depreciation or breaking out the principal and interest of a note, things of that nature. And they're usually done each month, and sometimes they're of significant amount, and sometimes they're not. So that's usually a step that'll bog down the month-end close process. Better practice is identifying any errors and correcting them along the way and making sure they don't reoccur. That streamlines the process. Any memorized entries, we would highly recommend that you utilize that feature in memorizing month-end entries. And you want to cross-train multiple employees so that if one person is out in a particular week, since we're looking to streamline this process, it doesn't hold up the whole process. Someone else can do that particular task. So cross-training, we believe, is very critical in streamlining the process. Okay, let's talk about the 7 ways to automate monthly close. We kind of talked about how it can save time, it could save money. We talked about specific areas that you should focus on. Now let's talk about 7 ways that you can specifically in your company automate the process better, saving time, saving money, having more accurate information. Some of these are going to be easier than others, but let's go through them. So number 1 is reconcile the bank throughout the month. Many times the old school way is you wait until you get the bank statement at the end of the month, many times mailed, and then you do the reconciliation. There's really no reason to do that in this day and age. You can look at it daily or weekly and reconciling it along the way. You can call up the bank statement or bank activity online, reconcile it to your accounting records so that at the end of the month, you're only doing maybe a couple of days worth or a week's worth at the most, and therefore streamlining the process. Don't wait until bank statements are mailed to you. That is very much old school. All right, number 2 is leverage your software, depending on whatever accounting software you have, making sure that that is interfacing properly with any point of sale system you're using, and utilize all the features of your software. So, look at industry leaders as far as software, making sure that you have someone who understands your industry, is flexible enough to work within your industry. And what's critical also is obtain training on an ongoing basis. Many times your subscription to that software includes training, whether it's online training or webinars of whatever nature. I highly recommend that you require, not even suggest, require your bookkeeper or your controller to view them and stay current with the latest changes. Many of them just fall into that rut where it works for them, it's not broke, so no need to fix it. You're very much going against the grain when it comes to that. I'll refer to that on another step as well. And here it is, employee training. Bookkeepers focus more on the result, not the process. They want to get the end result there. So whether it takes 5 minutes or 35 minutes, the importance is that it's accurate. And yes, that is true. The importance is in the accuracy of it. However, there's no reason why in this day and age with the utilization of technology and how there's so much out there as far as ways of improving processes that you can't challenge the bookkeeper to be more efficient in getting the accurate number. And many business owners feel uncomfortable there because they don't quite know the nuances of it, but that's where you need to challenge and ask the whys and the how, like why are you doing it that way and how can you do something better? Number 4, identify processes, weaknesses, and outsource them. Depending on the size of your business and depending on the expertise of your staff, it may make sense to outsource some of the accounting process and specifically the month-end close. That's something you would have to look at specifically. We at CFO On Demand review that process. That's really the cornerstone of what we start with because we feel that there's savings right from the beginning of the accounting process all the way up to the reports that help business owners make critical decisions. So this process is critical to kind of assess what's happening internally and determining what's the best result for what's the best way of getting things done for your company, depending on what the level of knowledge is with your staff. you can look at the accounts receivable and the accounts payable process as a good start. Number 5, implement a new close process. Once you've kind of assessed what's going on and what's currently being done and get a feel for what new automating processes exist, the next step is to create or recreate and document a month-end close process in order to improve it. And that is something that you don't necessarily have to do every year, but at least every other year. Really challenge the bookkeeper to do that. If they do it every year, wonderful, but at least really challenge them to do it every other year. Again, I allude to it's like building a house. Once you have that foundation, you can kind of work on it, but it's a new foundation that you're creating, and that's what's important in order to improve the month-end close. You have to have a new set of steps in the process, and that gets a little unnerving, especially with bookkeepers or accountants who are built to keep things going and consistent. When you rock the boat, it tends to shake them up a little bit. You want to set a close date also as far as when you get the financials and when the close is done and you can generate the financials. And that's really the critical part with this, is that you want to be able to get reports more accurate and more timely so you can make more accurate and timely business decisions. That doesn't happen if the close process is antiquated. So you can't have an innovative company with an antiquated close process. Very hard to do. Number 6 is work as a team. The closing of the books falls primarily on the accounting department, no question about that. However, the accounting department is heavily reliant on the sales department to get their information in on timely, the payables department, and then any other department heads as well. So it's important that they all understand that they have a piece or they influence this process. So if any one of them is too busy or doesn't value the amount of the importance of the information and doesn't give that information to the accounting department timely, they're going to delay the process. So there's external factors that can delay it, vendors and customers, but there's also internal factors that can delay it, which is different department heads. So that's what I'm saying. These processes might seem easy to say, but I do appreciate there's a lot of moving parts and something that needs to be looked at on an ongoing basis and really holding the accounting department accountable for that, for the business owner. And many business owners don't really focus on this. They're focused on driving revenue and such, but this process is more important than many business owners give it credit for. Lastly, if they do work as a team, I would give incentives there, whether it's a half day off or whether it's more time to do other things in the company that maybe the accounting department really enjoy to do. Whatever the case may be, there should be incentive there, or maybe there's monetary incentives, not knowing exactly what, but there should be incentives so that the accounting department is rewarded for doing their job especially well. Last is eliminate steps that don't add value. Clearly, again, once you get into a repetitious process as far as a month-end close, many times you're doing things not really quite knowing why you're doing them or if it's adding value. When we look at processes through CFO On Demand with a fresh set of eyes, invariably we catch that there's processes being done that maybe had a purpose prior, but now don't, because there are better systems around the company where that process is not needed as much. So maybe the register system is improved, but we're using processes that are antiquated with the old register system, and there's really no need to do them anymore and generate reports. So that should be looked at with a fresh eye. This will remove any artificial or unneeded bottlenecks, because you're working on reports that no one's really using anymore or no one needs anymore. So You want to make sure that you're eliminating any of those steps. You want to act as if there's a new person coming in the company and they're looking at the process and they're looking at the output and they're saying, do I really need this? So you're looking at it with a fresh set of eyes. All right, so in summary, the 7 ways to best automate the monthly close is one is you want to reconcile the bank throughout the month. This is usually the biggest part of the month-end close. So you want to automate that and do that during the course of the month as opposed to waiting until the month end. That's usually one of the primary time killers there with the process codes. You want to leverage technology. You want to utilize the fact that you can open up during the course of the month your accounting software and your bank the bank's activity online, and you can reconcile that during the course of the month as opposed to just waiting a month and when you get one peek at it. You want to train your employees, and this is a tough one because you got a tough group there in the accounting department. They like slow and steady and getting it accurate. They're built for accuracy, not necessarily speed and efficiency. But you do want to push that, and once you get there, you want to train and retrain, especially if there's turnover in those departments. 4, you want to identify any weaknesses and outsource them. You know, depending on how much you want to invest in your accounting department and what you want them to do, you're either going to train them to do these tasks or you're going to outsource them. That's a decision made on a company basis, but one that needs to be made. You can't just let that happen. Again, at CFO On Demand, we help clients make those decisions based on what the staffing is in their company and what their needs are. You want to implement a new close process. Once you've looked at it and you've assessed what's there, you want to implement a new close process so that it's more efficient and more up to date. You want to work as a team, make sure everybody in the company knows their impact on the close and don't inadvertently, because sometimes they just don't realize that they're holding up the process. You want to make sure that they are contributing and on a timely basis, giving the accounting department what they need. And you want to cut out steps that don't add value to your company. This illustration demonstrates how we at CFO On Demand work with this particular process here on the far left. You see the internal accounting staff, they're doing their financial reporting. So, you know, that's month-end close obviously generates the financial reporting there. And the blue line is what we typically find when we go into companies. We're looking to elevate it more towards the green line where we're increasing the accuracy and the amount of work the financial reporting, the internal staff is doing in the financial reporting aspect of it. So then we can take that information, perform financial analysis on it so that we can help the business owner make good business decisions, so that they are more of business strategists as opposed to just operators. Conventional CPA services really don't delve into that area unless the client specifically wants that. We do that as a matter of course because we see the importance of the accounting function and specifically the month-end close to what we do, which is analyzing financial information and help the business owner be more successful. So this is really a critical process. It's not one that is very sexy or exciting, but frankly, it's very necessary. Here are some upcoming webinars. The next one's going to be on succession planning. We get quite a bit of questions on this topic during the course of the year. We'll talk about exit planning for clients and where they see their businesses going and what they see for themselves as part of the succession plan process. And we'll share some of our experiences with you in that respect. But thank you for attending this webinar, and please wait to hear a word from our sponsor.
Community banking to me means that our officers are involved, they're local, they live here, they're involved in organizations that we support.
It's important that the community responsibility that we have is embedded from every employee in the organization.
I think OceanFirst definitely understands the community better than some of the larger banks who aren't from this area like we are.
What I love about Ocean First Bank is knowing that every single customer that walks through those doors is being treated like family, and we all work together as a team here.